what this gentleman was looking for. I'm going to call him John. He was looking to kind of raise $10 million for this new concept, this new idea. And he said, like what should I look for? How should I start this fund? And I took a step back and I said, okay, well, just tell me a little bit about your track record. What have you done specifically as it relates to, he was in businesses, but the same thing, like he was basically going to, roll up a bunch of businesses and invest in them. And I said, well, same thing in real estate. I said, look, I've never done a fund. I've tried it and struggled. And so I have a very specific perspective on this, and I might be wrong. However, I've been at raising capital for probably more than 15 years, and I've raised a lot of money, relatively speaking. And I just said, like, what's your track record on this? Well, I don't have a track record. I said, okay. Tell me about the plan itself. Like, how clear is it? What exactly are you going to be doing? And how is money generated? And I could tell that he was kind of early on in terms of thinking it through. And I'll give you a good example, and I'll even kind of pivot away from real estate just to kind of illustrate the concept even more. Let's say you have two people, and one person says, you know what, I want to open up a pizza restaurant at 123 Main Street. We know that there's 10,000 people a day that walk by. We figure we're going to get 1%. Our sales projection is going to be this. Our rent is this. We know our profit margin on pizzas is this. We have the cook lined up. We've got the bank financing. We have a lease. Essentially, you have a very well organized business plan. Compare that to someone that says, you know what? We want to open up a chain of restaurants across Canada and US. We want to open up 100 over the next year. And you say, well, what kind of a restaurant? Well, we're not really sure. Like, definitely burgers, probably pizza, maybe this. Well, how big? Well, we're thinking maybe 2,000, maybe 4,000 feet, like something in there. Okay, well, like, have you done this? Well, I was a cook once at such and such a restaurant, at a breakfast place. And, I'm using this example, and it may sound like I'm being a little bit facetious here, but this is sometimes what happens when people try to raise a fund and they haven't even kind of got to, let's call it like step one of raising money for one property. And the reason I get kind of passionate about this is because I've just seen too many people spend money on service providers, on people that will basically take their money to create a pitch deck, to create like the syndication documentation, to set up a private mutual fund, and they spend $100,000 or $50,000 or whatever the number is, creating the infrastructure of a fund, and really no one has taken the time to ask them the tough questions up front, which is like, what exactly is your track record? What is the plan? What is the proof of concept? How much money are you going to be putting into this? And like, how are you getting deal flow? Like, what is proprietary? What is unique about what it is that you're doing? And I feel that if because I had no horse in the race, right? I was purely just trying to help this guy out for 15, 20 minutes. And I wasn't trying to talk him out of his end goal of a fund. I said, look, like, if the end goal is for you to have a fund to be able to raise 10 million, because I get when you have a fund and you have access to capital, you can pull the trigger fast, right? To me, that makes a lot of sense. The challenge is that you're going to run into sophisticated investors that are going to ask you those tough questions. And if you don't have good answers, unfortunately, I think you're going to spin your wheels for the next 12 months. And I would rather you get one project, right? So this is exactly what I suggested. I said, look, start small. Step one, just get proof of concept. Find one business or one property that you're going to add value, execute on, work out the kinks, figure out what works, what doesn't, refine your team. There's going to be some people that work out really well and probably others that don't. Number two is, like, make sure you have some skin in the game, right? Investors really like to see that. Number three is kind of record your journey and build your own audience of investors. And the reason I think this is important is a lot of new investors raising capital struggle because they don't have anybody to talk to. And I said, like, starting small, you're able to kind of build that audience of people that follow you along, and they see, the the path to your end goal, which is $10 million, is not going to be a straight line, right? Like I could say, well, this is how I raised money. And then you could talk to 5 other people and they're going to tell you other avenues that they've used successfully, right? So I don't think that there's one way, but I believe that having a group of people that believe what you believe, an audience, if you will, is very valuable. Okay, so just that was another thing that I suggested. And then I said, after you do it once, find another property or another business, and then another one. And after you have several of these case studies, or like where you've shown that you've been able to execute on it, I said, and you take this long-term approach, right? Instead of thinking for the next 12 months, 18 months, 2 years, which is what I think, generally speaking, a lot of investors, they kind of have like a shorter time frame. I said, think about this as the next 10 to 20 years that you're going to be doing this. And I said, like, in 5 years, I believe that you're going to accomplish a lot more if you take that long-term perspective. You nurture and build those relationships versus trying to, like, go from 0 to 10 million. And I said, look, it could work, right? Like, I might be wrong on all of this, and maybe your idea is fabulous. So take this with a grain of salt. But I'm just telling you, if it was me and you were going to pay me to consult and help you, this is exactly what I would do. And I said, I'm just telling you, like, because I don't want you to go down the wrong path and struggle, and only to say, you know what, it didn't work. The fund is a bad idea, or whatever it happens to be. It's not a bad idea. It's just a tool. And, I would say that if you don't really have the skill set to use that tool, then it's, you're basically going to get frustrated and struggle. So I think that that's really what I wanted to share today. I know that I get a lot of questions around funds, and I would say the other part is, like, I think investors new to this business of raising money, they confuse, funds, syndications, GPLP, like it all kind of sounds similar. And what I would say is, like, just take a little bit of time to understand it, right? I mean, obviously, if you're here or you're listening to this on my podcast, then you probably have a pretty good idea. I mean, I have written a book. You can literally get it on my website for free. And I go into, like, specifically how I raise money, which is limited partner, general partnership, like LPGP structures. It's not the only way, but it is a fairly common way, especially in real estate. And I think at a minimum, you'll start to understand the language. And I would say, like, if you're talking about raising a fund, and, like, you should know the language, know the terms that people are going to use. You should have a pretty good idea of what a pref is, or a preferred return. Like, there's, like, just common language, vocabulary, whatever you want to call it, that is associated with raising money. And when you don't know that, what ends up happening is, when you start having conversations with people that are in the business, one of two things: they're not going to take you seriously, or secondly, they will take advantage of you. That's all I'll say on that. So, okay, that's all. Hope that was helpful. If you are thinking about raising a fund and you've never really raised your first million, I would say start with one property, one project. This isn't investing advice. This isn't, capital raising, accounting, any of that kind of advice whatsoever. This is just my experience and what I would do if I was starting over. Okay, so that's it. Have a great week. We'll see you next time. Bye.